I wanted to put this panel together. I know that there's a lot of hype around generative AI. It's happened so fast. I mean, we look at NeurIPS, and typically there's a 1-year waiting period between, getting your paper confirmed, at which point so much has happened that, it's hard to really stay on top of that. So I wanted to speak with the VC crowd and see, what the sense of your vantage point was really. And this is hopefully an opportunity for us to explore that. So I wanted to kick things off and just ask the first question and just get right to it. So what are the key things that you look for in a generative AI startup before deciding to potentially invest in one? And Dan, maybe we could...
Yeah, I'm happy to kick off. Yeah, everybody, hey, it's great to be here. Thanks for coming out. I think all of us are investors investing in the category of AI, which historically was unique and different and niche and has become less so for good reason. I would say today, as we kind of think about the things that make AI companies unique and what we look for, there are a couple of things. One is actual technical differentiation. I think as everybody's kind of alluded to and spent time with, there are a lot of businesses that are using AI, but it's primarily other people's AI, and they're building a UI or UX around it, and are not building their own unique technology around it. I think that can be an interesting business, but is less of an AI company that's much closer to a vertical SaaS or horizontal SaaS business. So as we kind of think about interesting AI businesses, we look for ones that are building a new technology or forming some form of differentiation on top of the underlying tech stack. And as one unique characteristic of AI companies, another thing that we look for are data moats. So for a lot of, as everyone in this room knows, AI runs on data. If you use commoditized data, you'll have commoditized outputs. So as we think about really unique and special companies, it's the ones that can pull together unique data sets that are differentiated and very interesting.
Sounds good. And this is Yatong, and it's good to come out and also talk about AI today. And 60 Degree is a Toronto-based investor. We look for investment globally, and we have strong presence in the US community as well. And just like a little bit more background, we also, other than direct VC investment, we also invest in other VC funds. So we actually LP of Lightspeed, Andreessen Horowitz, or like NEA, like Tiger, those people. So we kind of like know what is the most maybe up-to-date like AI investment trend in the Silicon Valley, so we can also learn from it and also follow some of the investment insight as well. So I think for like when we are looking at maybe generative AI investment, just because we are more like a later stage investor, so we want to see more like matureness like in the companies. We want to see some metrics, we want to see some numbers, we want to see some like initial product market fit. So if it's a like just like a brand new like idea is like maybe like a cool tool that maybe like a group of developer that maybe created like over a weekend, that's really nice, but it's just like we want to see more. So I think when we are looking at like investment in those areas, like some numbers, like just to prove that, like prove the like commercialization opportunity is very important. And also, I think Ryan also like mentioned the data mode. That is very, very important. I think right now, like when you are building a AI startup, like how you compete with the incumbent, I think that's the top like question you need to ask yourself and also think about it. If like one day, if you are really relying on like an incumbent to get the data source, and one day they take that data source away, how you handle that? I think that will be like a big like issue for us to think about before we make any investment. So pass to maybe Michelle to talk about as well.
Yeah, thanks everyone. I'm Michelle from Georgian. So we're a traditional B2B SaaS investor. We've always taken sort of a data and AI approach since our founding in 2008. And so I'm probably going to provide a bit of a SaaS growth investor perspective on this. Totally echo my fellow panelists' points. I think the one nuance I'd add is that when we look at founders and we look at product and technology builders, we're really looking for people who are flexible, are able to pivot. This is, when you guys are all here, right? You're learning about all these new technologies. There's so many things that are changing. And so it's really finding a builder who understands all the new technologies, is flexible, is able to think about their architecture in a different way, while also trying to balance the importance of building a critical business and understanding the value propositions. And sort of putting those two together is really important, and that's sort of a key characteristic we look for in some of the teams that we're investing in.
Great, thank you. Can you give us a bit of a sense of what the landscape is from your perspective at the moment? Are you guys getting bombarded with startups? I mean, we all know that there's so many sessions here today on generative AI and large language models. We hear a lot about it. It seems like it's very, very hyped. What's that look like for you and your portfolio of potential companies?
You want to?
Here, I'm happy to start. I think, as folks in this room would be familiar with, AI is a very broad term. It refers to a lot of things and can cover a lot of buckets. The way we kind of think about the market is looking to various layers that compartmentalize AI. So there's the hardware layer, so NVIDIA chips, A100s, GPUs, things like that. There's the model layer, so that's the OpenAIs, the Coheres, the Anthropics of the world. There's a tooling layer, which is kind of where you look at things like LangChain or things that are building on top of the models, and then there's an application layer. All of these are very, very different business types. They're generally not analogous and have very unique characteristics to them that are different. Right now, given the explosion of hype from kind of the usage of ChatGPT from 6 months ago, a lot of businesses are being built at the highest layer, at the application layer, where people are trying to apply, how can I make ChatGPT for nursing, for lawyers, for finance, for accounting, et cetera, et cetera. That's where I would say the most of what we're seeing is today. But there's certainly a lot more AI companies than there were about a year ago. But curious what you guys are seeing as well.
Thank you, Ryan. So maybe I can also share something. So I think after ChatGPT, like AI is the topic for Silicon Valley right now. Like everyone is talking about it, and also there were like really a lot of nights that I just couldn't sleep just because the innovation is like happening so fast. I just really concerned that maybe one day I would just be replaced. Like you just type in your like maybe prompt in the ChatGPT and it will give you like a right investment decision. So you don't need a VC anymore. So it's getting real. And so for us, we CC actually more like a infrastructure investor. So we invest in anything enabling the software development cycle. So AI machine learning is one of the building components to our understanding to next generation software. So we always try to invest in the pick and shovels for AI era. So we have started investing in AI like actually a long time before. We have like so many portfolio companies that are actually benefit from this like new AI kind of like craziness or like frenzy. So we're seeing a lot of that, but like this year we are actually being extra cautious on AI investing. Everything is so expensive. Like just like think about maybe 2021 or 2020. Like look at some like really hot kind of like sectors. You always see premium valuation for those like investment. I think this year like AI company also having like higher price and for investor to pay. So we're being like very cautious. Like so far this year we haven't really invested any AI companies this year, but we actually did a lot of infrastructure investment just to maybe build like some like preparation for maybe next generation of softwares. Sure.
Cool. Yeah, I'm happy to add a little bit. I think where we see quite a lot of activity, again, as Ryan mentioned, is really at the application layer, given Georgian spends quite a bit of time in the SaaS space. And I think for builders here, it's a lot of organizations that might have already built out some sort of platform tool, right? You might be operating the contact center, for example. You're building, I don't know, like a workforce management tool. You've already built out your workflows. You're tackling a really complex problem, and we're seeing a lot of these organizations now build on generative AI features because of, again, the accessibility of some of these models, being able to sort of play around and tinker. They might not be at like 100% fidelity or accuracy, but you're seeing a lot of engineering teams willing to experiment and try, and I think that's probably driving up a lot of the multiples, is sort of tacking on your AI feature as you're going out to fundraise. So that's one thing that we're seeing. We're also seeing quite a lot of companies find ways to operationalize this in their OpEx, right? So figuring out ways, if you've got a small marketing team, you're sort of desperate for funding, but again, you can tap into a lot of these tools. So we're seeing that quite a bit in the landscape as, so you've got really good growth, but you've also really thought about how you can leverage generative AI or AI applications in your cost base.
Thank you. No, that's fantastic. So we've seen in the last couple of years more models being put into production, more startups, more enterprise companies using AI. We've also seen an influx around concerns and a lot of different technologies and methodologies around privacy. Regulation has been obviously huge. And now we've got this big ChatGPT boom and there's so much behind the scenes that we don't really know where these data sources are coming from. and obviously privacy is an issue. I think a lot of the conversations around potentially highly critical applications of generative AI, yet these concerns have not even been even close to being addressed. How do you assess when you're looking at a potential startup or an idea or validating the potential of a startup, keeping in mind those concerns?
Yeah, I'm happy to tackle that one. So I think there's a lot of complex issues, right? It's going to take time for us to all, as a collective, figure out the right answers and the right response. But I think as a startup operating in this space, this is the perfect confluence of things happening for you to take advantage and be a differentiator and leverage trust as a differentiator. So at Georgian, we've built a trust thesis in about 2017. So it's been quite a few years we've been operating with this lens of being trust first. And we've seen firsthand how that increases your growth, keeps customers sticky, and that applies across many different technologies, right? And generative AI is one of them. You can see Anthropic as a really good example as competing against OpenAI. They've taken a much more transparent approach to how they're building. And so how can you sort of think about putting this into practice, right? I think the way that we've defined trust at Georgian is it's the intersection of reliability, accessibility, and sort of taking accountability for your organization and how they manage your customers' data and privacy. And so with reliability, it's all about focusing on what are the expectations of your customers, right? Build your product, your model, your solutions around both meeting and exceeding those expectations. And if you're not necessarily there yet, leverage things like confidence scores or explainability into giving your customers a bit of context as to like why the prediction is the way it is or why the output is the way it is. And again, it's increasing that level of transparency. In terms of accessibility for the enterprise, it's super important to think about how you're managing security and privacy, no matter what technology you're using, right? And so I think this is a super exciting space, both from like an investment perspective, but both also from a tooling perspective, where you can think about anonymizing your data with synthetic data, using PII, redaction, removing the prompt and disassociating it from the user. So there's lots of different techniques you can use. And then the last piece is all about accountability. And so it just means be open, be communicative with your customers, and just be honest about how you're using and leveraging their data.
I just want to throw in a quick side, unscripted question. When a company, we kind of encourage them to look into transparency and fairness and privacy and all these issues, and there's a lot of tools. There's also like a science behind this. Do you feel more comfortable if a tech team within a startup is taking that on board themselves as opposed to maybe leveraging some of the tools that are out there or some of the open source, federated learning workshops that we held one today, for example?
Yeah.
What would be that comfort level if there is one from a VC lens?
Yeah, that's a great question. I don't know if I have a full-fledged Georgian stance on this. It's funny because we're looking at this space both from an investment perspective because you can sort of see the CAGR grow really quickly in this space, and it's likely going to be something exciting. And again, something that we believe in and something that's important. But at the same time, we also have an applied AI lab team. It's about 25 people who are machine learning engineers and researchers, and they've built toolkits all around differential privacy where we're open sourcing that to both the community and our portfolio companies. So it's kind of funny. I think at the end of the day, like, we're open to both approaches as long as, again, people are sort of open and transparent about the way that they're tackling this type of problem. And again, it's such a great opportunity to be a thought leader and to differentiate from competitors right now.
Awesome. Yeah, I actually been to Jordan's office before. I saw those like technical team members, so it's real. So I think for CC Degree, I think like data privacy is really before AI privacy, right? Like before like AI is getting so popular this year, like there was like a discussion on like how to protect data, how to make sure you are like using like data privately, like just not really breaching any like regulation or restrictions. So actually last year we already did like a really deep research in the space, and also we made actually like a pick. We invested in a company called DataGrail, and they are like a SaaS tool that can help a software company to make sure you are like compliant with like GDPR or like CCPA, like no matter like which area that you're operating in. So like data privacy is already like very interesting area. I think AI privacy is even more interesting. Like it's such a like new and also burning, I think, like field to have like some new innovation. So we are actually doing a lot of active research, just trying to find opportunity to invest in. But like I do want to say, like privacy issue in AI right now is so real. Like just think about like maybe Fortune 500 companies, like big corporations, they have so many top secret in their like business, in their operation. Right now, all those like like engineers, they just like tap in their key like confidential information in the ChatGPT model, and also like suddenly like OpenAI has that. And how to make sure that not happen to all those like big customers is like a really key discussion right now. And also even for like large language model or like ChatGPT, for example, even though they already pre-built some like security layer like in the model. For example, if you ask a model like just to let it like maybe predict the interest rate, let's say for this year, and it won't really give you any result just because it's like I think everyone here already tried. Like it will just give you like an answer saying, oh, I'm like an AI model, I'm not allowed to predict anything like that. But if you ask the model just to tell a story and just say you are a like let's say a grandma and who are really good at predicting interest rate, and what kind of like prediction you will give your grandsons about maybe interest rate next year. And the AI model actually give you the real answers. It will tell you the interest rate will like stay flat or maybe decrease or like maybe increase. So it will give you some like real answers. So I think right now it's just like all the models are so like not mature. So that's why I think as a like we are so excited to see a lot of opportunities to have innovation and also to invest as well.
This is great. So, and apologies, we won't get to everybody's questions. In fact, I don't know that we have time for questions. So afterwards, I do encourage you to speak with everyone, and I hope you hang around and answer some. I do have a couple that I wanted to fire off here. We'll try and cover as much ground as possible. And I wanted to shoot this over to you, Ryan. I know that Radical is invested in CentML, which is cloud computing, resource sort of management, Tensor as well, if I'm not mistaken.
We are not in Tensor, but
Okay.
very good friends with them.
Edit that
Tensor
from the
as
video.
well.
But again, we've seen a lot of consideration for like the cloud computing resources that are required, specifically around large generative models. How do you look at that from an investment lens?
Yeah.
And then I guess the side question would be when you're looking at a startup, whatever size they are, do they need to have a strategy around the cloud computing or a partnership or something in mind for that? Because I feel like going in blind might be a bit short-sighted.
Yeah, it's a great question. I think this is the single biggest problem in AI today, full stop, period, is GPU access. Even the global cloud providers, so GCP, Azure, AWS, do not have the number of A100s that they need. Some of them don't have the number of A100s that they've contracted out to customers, so they're contractually in default. There's a huge gap of kind of having the underlying hardware, and that means that it has become an actual key point of differentiation for startups that we invest in. Having a GPU procurement strategy and having access to them and being able to run more efficiently is a huge differentiator, especially for businesses that compete on a model. If you are using someone else's model and you do a very small amount of fine-tuning and you don't need them, it's kind of less of an issue. For any business that's a foundation model business, or at the very least training and using small models, it's a huge issue. So as we kind of think about it, it's a question we ask every single startup. It's a huge gap. Players out there like CentML, which is one of our portfolio companies, work to optimize both model training and inference and are incredibly valuable. People have been saying that what happens when the supply of GPUs comes online and this is no longer a problem for more than a year. It hasn't changed. I don't see it changing anytime soon. I think it's an ongoing huge issue in AI.
Thank you. No, that's interesting. We've heard a lot about the power of having a strong founder, co-founder, and placing a lot of like perspective on or evaluation on that assessment. When you look at a startup, do you look at sort of team composition? Is there something that de-risks something perhaps, or maybe seems a little bit more enticing than the other? How do you look at that?
Maybe I can take it. So for like when we are evaluating like AI companies, I think we need to see like a technical background person at least in the team. Just make sure the team understand the technical background and also why like the thing they are building is differentiating from other options maybe in the market. So technical background is very important, and also I think sales experience is also quite important as well. Maybe it's not like so important in the super early days, but like because we mainly invest in later stage companies, right? Like anything maybe after Series A or Series B. So when you like already hit to maybe like $5 million or $10 million revenue, you still need to find ways, just to sell more to your existing customer or find new customers. So like having like deep understanding on how to sell and how to build like an efficient sales strategy is very critical as well. So I think sales like background is also very important. And lastly, just want to mention maybe having experience at like large incumbent technology companies, like know how to process data, how to like manage like a product, how to roll out like new features is also critical as well. So having those three is already like you already 50% got our money like for investment. So that's to Michelle.
Yeah, I think the one thing to add on from like a SaaS perspective is actually having, especially if you're building in the application layer, is actually having somebody who has specific domain expertise, right? Mm-hmm. Because you're working on these really critical problems and trying to map out complex workflows. At the end of the day, your technology and your tool isn't just going to be like, it's just generative AI. Like, it's not that, right? Like, you're building a SaaS solution. You've got lots of other components to think about. It's about figuring out what your pain point is, how generative AI could be part of the solution to solving that problem for your very specific persona. And so, especially if you're building in the application layer, it's really important for us to see some specific domain expertise or having spent time, personally with a specific problem that you're solving.
Fantastic. So why don't we do this? I don't think we have a microphone here, but if anybody has a question, we have a little bit of time for, say, one or two, and some short rapid-fire answers as well. Does anybody have a question? Please put up your hand if so. And I will, I see, no? Okay. I do have a question.
Shy audience.
Yeah. Well, I didn't give them a cue. I didn't give them a heads up, so I don't think anybody's prepping for that. How do you assess the technical sort of layer when we talk about something like generative AI, or I guess suppose anything for that matter, that is very in-depth?
Yeah, we have PhDs that we have on staff that we work with. We work a lot with people from the Vector Institute, from companies like Layer 6. We have PhDs on staff to make sure that they're doing proper tech stack diligence. Mm-hmm. Usually we save that for the very end. It can be a little bit painful for both parties to go through, but it's a very necessary step, but it's definitely something I think is worth doing. Yeah.
Ryan, is there any partnerships, either with generative AI companies or companies that you're looking for, that you think startups, or you might advise startups to sort of explore?
Yeah, I think there is a ton of room in just co-pilots broadly defined for things to be developed. So obviously there's Copilot for coding that exists that I think a lot of people are familiar with. But basically every industry and every category, I think a Copilot will emerge for. So even if you think about for doctors, for education, for lawyers, for accountants, for VCs, for machine learning engineers, there's a Copilot to be built in basically every category.
Sorry, can you just describe Copilot?
Copilot, so basically an AI tool that works alongside humans to make them more efficient. So instead of displacing somebody, you make them much more efficient. So the analogy that I think folks would be most familiar with is the software code development Copilot that Microsoft works on. That is a really hard technical task in every industry, and it requires deep domain expertise. So I think there's a huge amount of runway for a whole bunch of business to be built in the space by marrying, as Michelle alluded to, deep domain expertise with technical AI expertise together.
Yeah, maybe I can add something on the how to evaluate like technical part of a like potential investment. So like internally, we also have like a pretty strong PhD team. We have right now like 8 PhDs in our like team right now just to evaluate our investments, and we actually also look for more like technical background people like PhDs to join us. And I'm actually surprised by like when I talk to like PhDs or like maybe technical background people, like they never actually thought about like VC as their like career like choice. So when I say like why not like joining VC to help us on investment, and they're like, I want to build what I have been building in the past maybe like couple of years. I don't want to do like investments. So I think just like maybe another like interesting option if anyone is interesting. So we have like an internal PhD team, and I think externally you can also look for like corporate or professors, or even our portfolio company CEO or CTOs. They all like really, they have like very deep knowledge on the technical things, so they can also help us well. Yeah.
Sounds great. So what we're going to do in a minute, I have one last question, but we're going to actually invite some of the startups here to give a quick lightning presentation. We're going to get your thoughts, because I'd love to, put you guys to provide your feedback or thoughts and see what you come back with. Last question I do have is, obviously for a startup, if somebody's here in the startup, they're trying to create business value, they're trying to find a good proof of concept, a good business model, a sustainable business model. Yet every month, something new is either coming out, or you have that existential threat of something being disrupted. How can startups perhaps come to some type of peace, given that that's the landscape they're living in?
Yeah, I think it comes down to figuring out what your milestones are, right? The way that we think about it is like twofold. So set what your technical milestones are going to be, 2, 3, 4, whatever it is. I'm going to leave it up to the technical people in the room to figure out what those are. But constantly measure and monitor and compare yourself against those metrics. And then the other piece to really think about, and I think this kind of moves in a really nice flywheel, is what are your metrics financially, right? And that can, especially at the early stage, you really want to be looking at how many people are signing up and actually paying for your product. You want to really validate your product market fit there. I don't know if that's going to make people feel better, but those are at least numbers that you can sort of validate yourself against. And then when you're sort of at the growth stage, it's really thinking about what is your retention, your gross dollar retention and your net dollar retention. So are your customers coming and do they love your product? Are they using it? Are they expanding their data usage? Are they expanding seats? Are they buying new features that you've now put out? All those pieces, your customer love and your technical milestones are going to work hand in hand. The more your customers love you, the more data they're going to give you. You can then fine tune your model. You've got a good model. You got customers that love you. It all works together. And so I think it's really set up your benchmarks and your milestones and think about where your competitors are in those specific categories. And it's just executing against that.
Fantastic. Thank you. Does anybody want to add anything to that?
I think that covered it.
Okay, so we are, I believe, going to have a couple quick. Oh yeah, quick question.
Just given that a lot of the large language models are taking a lot of resources to train machines and all of that, do VCs feel like they have a higher risk tolerance and a large budget for AI-related startups?
Did you get that?
Sorry, I didn't catch the last half of that question.
Does VCs have a higher risk tolerance if an AI startup fails? And do you guys have a large budget for AI-related companies?
So
I think just AI. I think the question is like AI startups like consume like so much resources. Like, are we having like a higher tolerance on like how much we can invest in?
Yes.
I think like as a VC, I think I think first internally like we are really trying to not touch on like large language model. We are like leaving that part to like all those like big incumbents to develop, and we are trying to invest something like build maybe on top of that. So that's our internal thesis, but not maybe really apply to maybe other VCs. So if you guys want to share.
Yeah, I mean we're big investors in Cohere, the LM business, so definitely took on a lot of risk in that category historically. I think the VC model is risk tolerant, meaning that you're willing to take on more risk than a later stage investor. But it has to be calculated and measured risk. So we spend a lot of time talking with the companies trying to figure out how much risk there is there. For foundation model businesses, they are capital intensive, so we think about it a lot for sure. If we think that the foundation model will win in this space, I think you can kind of get excited about it, but it's definitely not as lightweight as building a SaaS tool for sure.
Yeah, I think this is actually such a good question because we always make like the dating analogy in venture. You're getting into this like 10-year-long marriage with somebody, right? Hopefully even further if you exit and you make another company, you come back and call us. The questions that you really want to be asking is what is the VC's follow-on strategy? Are they raising a new fund? How much asset under management do they have? And really understanding what do you need out of this relationship, right? Is it just a capital provider? Are you looking for somebody who's going to provide value add? For example, Georgian is a really big value add investor. Maybe that works well for you, maybe that doesn't, right? And so spending time to get to know who you're getting your funding from, I think that's a great question. And there's lots of different layers you can think about this one from.